I'm Bambi Francisco with Vader News. SecondMarket, the leading marketplace for illiquid assets, just raised $15 million. Joining me to talk about SecondMarket and where he plans to put the money is Barry Silbert. He's the CEO and founder of SecondMarket. Barry, congratulations.
Thank you very much.
You raised $15 million, but you already had $15 million in the bank. Why did you raise additional funds?
You know, for us, it was really all about the investors. So we raised money from Mr. Li Ka-shing and Singapore Temasek, which are two very successful investors out in Asia. Because as SecondMarket is creating a global platform for trading these assets, we need to make sure we had the right partners in place globally.
And is that a growth area for you in Asia in 2010?
It is. You know, over the past 6 months, it's been interesting. We've seen a lot of interest coming from Asian investors looking to get involved in private companies in the U.S. and also the other asset classes that we trade on SecondMarket.
And now you have $30 million in the bank. Where do you plan to put those funds to work?
Well, there's really three areas we're looking at. One is hiring. So we're about to embark on a pretty aggressive hiring campaign, both here in the U.S. as well as out in Asia. We're building infrastructure, so technology, as fast as we can. So we want to make sure that our business is completely scalable to accommodate. Instead of doing a couple $1 billion in transactions a year like we did last year, we want to be able to handle tens of billions. And then the third area is acquisitions. We're starting to look at companies that have either created markets in certain asset classes or can provide some service that our buyers and sellers could use on SecondMarket.
Well, you made an acquisition, was it last year, of Inside Ventures?
We did. We bought Inside Venture, which was one of the players in the private company stock trading space. And so we bought them, I believe it was summer of 2009.
Talk a little bit about acquisitions in terms of what kind of companies out there, if you don't want to name names. I mean, if you can elaborate on that a little bit.
Sure, of course. You know, we're looking for companies that have good technology, good people, that are somewhat complementary to what we're doing at SecondMarket. So as a platform for trading illiquid assets, it's very important to provide the tools to buyers and sellers. And so whether it's a research firm or a valuation firm or some type of data or analytical tool, we want to make sure that they can use SecondMarket as a platform. And so there's companies that are in those areas.
You found them.
We've identified about a dozen different companies that we've spoken to or are going to speak with as well. And then there's also companies both here in the U.S. as well as globally that have created a nascent market for new asset classes. So we're in 7 right now. We have 85 different asset classes that we're looking at possibly getting into.
Wow, that's a big expansion.
Yeah.
Now, what is the valuation you're coming now that you've raised $15 million?
So the money, the $15 million came in at $135 million pre-money valuation, so 150 post.
Congratulations.
Thank you very much.
What was it before?
You know, the last time we raised money was in 2007, summer of 2007, and I think it was about $15 million then.
Oh, so nice.
It's, yeah,
nice bump up.
Nice bump up for our investors.
You know, one of the growth areas is in the private company shares, and it's kind of a hot area people like to talk about.
Right.
This is where, if you're an employee of Facebook or Twitter, Zynga, LinkedIn, or if you want to get into those shares, you can actually trade or potentially buy those shares. So what are the 3 most popular shares traded on SecondMarket in the past month?
So we've seen a real dramatic increase in activity, so bidding activity in 2 areas. It's really clean tech and it's going to be social media. So the names you mentioned, so Facebook and Twitter and LinkedIn are very popular names right now. A lot of interest. In terms of transactions being completed, it's going to be in some of those names as well as some of the clean tech names as well. Some of the other popular areas or popular names we're seeing Craigslist, and we're seeing Tesla, and we're seeing Zynga, which I guess is social media. But there's thousands of investors looking to get into these companies, and they really haven't had an opportunity up until now to get access.
Which one of those has the highest valuation based on the prices being actually transacted?
Facebook is the king of valuation right now.
And then what?
After that, you know, it's probably going to be Zynga after that.
Oh, Zynga.
Yeah.
And then a LinkedIn, or?
Yeah, the others are going to bunch around in the same valuation. But the nice thing about SecondMarket is that it's completely transparent and it's free to access, and so anybody who's curious about what these companies are worth, they can go to our website and sign up for free and see where the stocks are trading.
So clearly, if Facebook having that high valuation, that's probably where you see the most demand. Where are you seeing most demand in terms of shares to purchase?
Typically what happens is once a company is about 4 or 5 years old, you see some of the former employees, you see some early investors, angels looking to get liquidity. So any company that is 4 years or older, there's a large number of shareholders, and where there's been a lot of value creation, you'll see shares being put up for sale.
Okay, so that's on the sell side.
Yes.
So you've got a lot of those shares available. What about on the demand? What about the demand side?
So the buyers tend to be institutional investors like hedge funds. We see some mutual funds that are now kind of crossing over from the public market into the private market. We see family offices and high net worth individuals buying stock as well in these companies.
Now, Facebook has been in the market at $21 last fall, but many published reports, and $32, I guess, by TechCrunch recently. So where is it trading today?
It's certainly in that range, but what I would say is because the SEC and the regulators don't like us talking publicly about pricing, I would encourage people to sign in and check out the price.
Now, how does a company like a Facebook work with SecondMarket when you're creating another platform and creating different valuations? For instance, it's $36, $17 billion or so valuation, and where some shareholders can sell at that price versus a private sale to DSD where some shareholders sold it for a valuation of $6.5 billion. I mean, are you causing some disruption there?
No, not at all. I mean, our approach is completely company friendly. So before we get active in a name, we speak with the company to make sure that, one, the seller actually owns the shares and that they understand what our process is. So our approach is we give the companies complete control, if they want to take control, over who's buying, who's selling, when they can buy and sell, even the price that they want to buy or sell at. And the companies also have the ability, through our platform, to provide information to potential buyers. So the companies we're working with, and there's about 40 companies that we're working with one way or another right now, decide basically who gets to sell when they get to sell. So if there's a transaction, like a DST type transaction going on, or they wanted to do that type of transaction, our process very much works in conjunction with or cooperation with the company.
Okay, so they don't see it as being, making it difficult for them to raise money at a certain time because there is this other market where they could potentially sell his shares.
Certainly not, and quite frankly, if a company said, don't do this, we wouldn't do it. But in the 18 months that we've been doing this, no company has ever said, please don't create a market for my stock, please don't work with my shareholders, because the reality is those shareholders, they're going to find another way to sell the stock. So at least through SecondMarket, they can do it in a company kind of controlled, organized way.
And the problem with having 500 or more shareholders, that's not been a problem, or how are you getting around that?
So the 500 shareholder count is when a company has to start filing publicly.
Right.
And so the issue that we see is that the companies actually like the SecondMarket model because we can actually consolidate shareholders. So the company can set the rules, so if you're going to sell, you can only sell it to somebody who already owns stock. Or if you're going to sell, you have to sell all of your stock. So it's actually a good way to take it down from 460 down to 400 and to 350. And there's a number of companies we're working with that are doing that right now.
Okay, Barry, you're going to stick around. We're going to talk about what happens when the IPO market opens up, your business model, and maybe what it means to have the T. Rowe Prices and Franklins and these companies starting to come in and buy some of the shares and use your market actively.
Absolutely.
I've been speaking with Barry Silbert. He's the CEO and founder of SecondMarket. I'm Bambi Francisco.